U.S. tax dodgers are costing the U.S. $1 trillion U.S. dollars. The IRS says the ballooning difference between the tax dollars Americans owe and the tax dollars actually collected by the Internal Revenue Service has become a point of focus for U.S. lawmakers who now see aggressive tax enforcement as a way to boost government revenue. Also, if you get a chance, if you go to our website, www.citizenshipquickly.com, hit that top bar that says apply with us, fill out the questions, hit that bottom bar that says send it to us. And also, we'll get back with you and see what we can do to solve whatever problem you got. And also, don't forget to hit that notification bell next to the subscribe button, and you'll get new videos as they come out automatically. And that subscribe button is to the right of your screen here. And I would like to hear from you. If you got a question or comment, just put it below, and I'll be glad to get back with you and see what I can do to solve whatever problem you got. Okay, now this is this article. It stated here that most individuals in the United States earn their incomes through wages, with taxes automatically deducted. But income from pass-through entities such as partnerships and limited liability companies isn't subject to automatic withholding, giving the owners a lot more opportunity to skirt tax obligations. Now, the head of the IRS calculated that tax evasion in the U.S. may total $1 trillion a year, a figure that is multiples higher than previous estimates from the federal government. The Internal Revenue Service Commissioner, Chuck Rettig, told a Senate panel Tuesday that previous tallies of the tax gap, which came to a cumulative amount of $441 billion for the 3 years through 2013, didn't include some tax evasion techniques that weren't on their radar at the time. Now, the new estimates include the use of cryptocurrency, he said, offshore tax haven or offshore tax evasion, illegal income that goes undetected by the IRS and underreporting from pass-through businesses also contribute to a larger than previously known tax gap, Rettig said. He basically stated, I think it'd be outlandish to believe that the actual tax gap could approach and possibly exceed $1 trillion per year, Rettig told the Senate Finance Committee. Now, the ballooning difference between the tax dollars owed and what is actually collected by the IRS has become a focus on Capitol Hill, where a rising number of lawmakers are coming to see more aggressive tax enforcement as a way to boost government revenue. The Senate Finance Chairman, Ron Wyden, said that the $1 trillion figure is jaw-dropping and a wake-up call for lawmakers. Now, the Oregon Democrat said that he's already spoken with the committee's top Republican Senator Mike Crapo of Idaho about bipartisan ways to actually address this tax evasion issue. Senator Rob Portman, an Ohio Republican, announced plans to introduce legislation to address cryptocurrency users dodging taxes. And Massachusetts Democratic Senator Elizabeth Warren said that she's working on a bill that would direct mandatory funding to the IRS so that the agency's budget for auditors wouldn't fluctuate year to year. They're getting ready to hire a ton of IRS agents, which I'm going to tell you here. Enforcement focus, this is what they're going to be doing. President Joe Biden has proposed to strengthen corporate tax enforcement as part of his proposal to pay for the $2.25 trillion infrastructure-led spending plan. He also plans to outlay individual tax proposals in the coming weeks. Biden's budget proposal last week also called for an additional $900 million for expanded audits. And get this, Rettig said that an extra $1 billion for enforcement could let the IRS hire 4,875 frontline audit personnel and update computer systems to help identify fraud and tax evasion. He said rebuilding the agency's auditing capability will be a multi-year process after the IRS lost 17,000 enforcement-related employees in the past decade. We want to get there, but we do need your help, Rettig said. Get ready. They're getting ready to go after you if you're in the U.S., you're a citizen or a resident of the U.S. They're going to be really ramping up these audits, especially on cryptocurrency. So if you've got cryptocurrency, you're going to be a target like crazy. So this is something you got to be observant of. Strengthening tax reporting requirements and the regulations oversee tax return preparers would help the IRS stop fraud and close the tax gap. Rettig said about 99% of taxes are paid to the IRS when there's an automatic withholding, and reporting to the agency, but only 45% of what's owed gets paid when those are lacking, he said. All right, and he talks about wealthy evaders. Most individuals earn their income through wages where taxes are automatically deducted from each paycheck. However, income from pass-through entities such as partnerships and limited liability corporations isn't subject to automatic withholding, giving the owners more opportunity to skirt tax obligations. A study released last month, which included 2 IRS officials as authors, found that the richest 1% of Americans don't report about 20% of their income to the government. Those individuals are able to pass through businesses and offshore structures to shield their income from the IRS's view. The study was talking about collecting that money would boost tax collections by $175 billion a year, the study found. Get ready, folks. They're going after you, especially crypto people. You need to be wary of this, and they're going to be going to vendors like Tesla, other places that they don't have to go after you individually. They'll go after these big ticket item places where people are paying with cryptocurrencies, and they will get a list of who those people are. Very easy to track it down. But anyway, if you get a chance, if you go to our website, www.citizenshipquickly.com, hit that top bar that says apply with us, fill out the questions. The bottom bar where it says send it to us, just hit that. We'll get back with you, see what we can do to solve whatever problem you got. Don't forget to hit that subscribe button on the right of your screen right here, and you'll get new videos as they come out automatically. And don't forget to hit that notification bell next to that subscribe button. And I would like to hear from you. If you got a question or comment, just put it below and I'll get back with you. And I'll be glad to see what I can do to, if you got a question, if you're making at least $150,000 US a year and you've got a net worth at least 1 million US, you need to contact us and we can try to help you. If your income is a lot less than this, folks, I'm getting people that are contacting us that are making $12,000 a year. If you don't have a tax problem and you don't have a high net worth, now if you're making a high income or you think you're in the midst of getting a high income, like I said, it's a lot better getting your money out and starting your business elsewhere overseas, relinquishing U.S. citizenship or getting out of your high tax residency place before you build that wealth up. But folks, you need to do this legally. You need to break those ties and do it legally before you don't want to be starting breaking laws and getting all kinds of trouble. Okay, you can break your tie if you from Canada, Australia, UK. You need to break those residency ties before you start and then move to a tax haven. And that's how you do it, and you do it right. If you're a U.S. citizen, you can qualify for the foreign overseas exclusion. You can also relinquish your citizenship. Those are 2 ways you can do it. By doing the foreign overseas exclusion, you're not having to relinquish, but you have more flexibility if you relinquish your U.S. citizenship. Anyway, I look forward to talking to you on the next video. Take care.